Hello traders, Jason here with SwingHigh.com. It is Thursday, February 4th, 2010, and this is your post-market analysis. It's about 5:15 right now. It's a little later than I normally make the post-market analysis, so it'll probably be coming at you a little later. But I was busy, and either way, after a day like today, I could not resist burning a post-market analysis. I needed to review this, so let's get started. Very bearish sell-off. Wow. The S&P down 3% on huge volume. I mean, we thought the volume back here was big when we broke out of the rising wedge. This volume matched it and exceeded it by a little bit. Wow. The S&P down 3%. The Dow down 2.5%. The NASDAQ down 2.9%. The financials down 4.3%. And the Russells down 3.3%. So huge drops across the board, very strong volume. The VIX popped 20% today. That is huge, almost 21. We are well above the 25 mark. Very bearish on the VIX. The Trin, zoom in here. Wow, almost a little too bearish on the Trin, 3.5. That makes me expect somewhat of a bounce tomorrow. 1.38 on the Trin Q. That's sort of a healthy bearish reading, but definitely bearish nonetheless. Let's go back to the S&P intraday here. Pretty much a straight sell-off. There weren't really any good consolidation periods. We gapped down, and gapped down pretty big. Under 109, shattered 108, barely held up there. Definitely held up here at the 107.20 and found some significant support. If anything, I would call this an ascending triangle type formation, where the prices kept staying low and getting closer and closer to this support line at 107.20, and then finally broke right here. But it wasn't really a good ascending triangle. I mean, we chopped around the 107.20 mark and sold off and finished the day on the lows on very strong volume. If anything, tomorrow, based on the volume alone, I would expect us to continue to the downside, but I would not be surprised with a small pop. If we do get a small pop tomorrow, I don't see us getting higher than 108. That's a good 50% retracement of this sell-off, if you will. And that would be a healthy dead cat bounce. Basically, a pullback just because the markets need a breather. At the same time that this looks so bearish, I can't help but think back to this period right here at the end of October. It looks very similar. We had a strong sell-off, a tiny bounce, and then a huge sell-off, and that one looked like it was game on. However, we put in a doji, it looked like a dead cat bounce at the time, and then just chopped higher and shot right back up to the highs, and then put in new highs for the year. So, I mean, the markets can do whatever they want. We could just turn around here. This could be a bottom, but right now we're just kind of hanging out in space. Next support I see is going to be here at 105, just a rough line there, and that's just because it's a nice round number of 1050, and there's some areas in here that make sense for it to be support. Other than that, if we stay under 107.20, man, next stop could be 103.70 on SPY. And that's very bad, very bearish, not bad. I say it's not bad because as a trader, you can trade in either direction and make money. So don't trade long all the time. I guess that's what I'm trying to say. Just do what the market tells you to do. The market's telling you to sell. You should be shorting the market, or moving into cash, whatever you prefer if you're uncomfortable shorting. So things are looking very bearish. This is the real deal. Definitely a serious breakdown out of this rising wedge formation on a lot of volume. So I expect more downside from here. Thanks for being a part of SwingHigh.com. I'll talk to you later.